Hello students, in this video we are going to learn the provisions of gratuity which comes under the head income from salary under the subheading retirement benefit. Before that we need to know what is meant by gratuity. Gratuity, it is nothing but amount paid by employer. To whom it is paid? It is paid to the employee. Why it is paid? It is paid for appreciation of his or her service at the time of death or retirement. It is called as gratuity. So, gratuity is nothing but it is an amount paid by the employer to his employee for appreciation of his service. It is paid at the time of retirement or death. We have provisions. Gratuity is very depend upon the employment status. So, government employee, non-government employee. If the gratuity received by the government employee, it is fully exempted from tax. If the employee status falls under non-government, then we have to see whether it is covered under the Payment of Gratuity Act. (1972) or not covered under the Payment of Gratuity Act 1972. Now, I write the provision. The first provision is, first of all we have to write like this: gratuity received less least is exempted. Least is nothing but the smallest amount. We have three provision. The first is, again the same thing will come, gratuity received. The second provision is maximum limit is 20 lakhs. The third provision is 15 by 26 into last drawn salary into number of years of service. If the service exceeds 6 months, it should be taken as 1 year. Taken as 1 year. Here, the last drawn salary refers to salary plus dearness allowance. Among the three, least is nothing but smallest amount. We have to see these three provision. The least should be deducted. The remaining is taxable gratuity. Now come to the provision of not covered under the Act. Okay. Gratuity received. Minus least is exempted. The first provision is same, gratuity received. The second one, maximum limit 20 lakh. Third one, 15 by 30 into 10 month average salary into number of years of fully completed year of service. The important is fully. In the previous cases, if it is exceed 6 months, we can round off as 1 year. Here, if it is exceed 6 months, it should not be considered. Only we have to consider number of completed, fully completed year of service. And when the gratuity covered under the Payment of Gratuity Act, Sunday should not be included. That is why 15 by 26. Here Sunday should be included. So the provision is 15 by 30. When you simplify, you will be getting 1 by 2. Now from these three, the least amount is to be deducted and remaining is the taxable gratuity. Now I will calculate 10 month salary. Here we need to calculate 10 month salary and it should be divided by 10. You will be getting 10 month average salary. Here salary refers to basic salary or basic pay and then plus DA. If means if it is entering into retirement benefit, that is a forming part of salary, then only DA should be considered if the payment not covered under the Payment of Gratuity Act. If it is covered under the Payment of Gratuity Act, the DA should be taken. Whether it is a forming part or not forming part, it should be added while calculating salary. But here, if it is entered into the retirement benefit, then only we need to consider plus commission on turnover, COT. If the fixed percentage of commission, rate of commission is given, then from the turnover we need to calculate commission. When you add, you will be getting salary. So like this we have to calculate for 10 month salary and it should be divided by 10, then you will be getting 10 month average salary. So 15 by 30 into 10 month average salary into number of fully completed year of service. So then we have to see the 3, in that the least amount is exempted, the remaining amount is taxable. It is an important part C problem from the semester examination point of view. In next video, we see the solution. Thank you. All the very best.